As the necessary scam, insurance is there to protect you in the event you make a mistake, for which the liability would otherwise send you into abject bankruptcy. But did you know that automotive insurance is actually not what is required by law? In truth, what is required is proof of financial responsibility. And this is, in practice, a rather nebulous term. According to the DMV in California, as an example, providing unto them a cash deposit of $75,000 or an equivalent risk mitigation asset allows you to waive the need for a standard auto insurance policy entirely. The question is doing so worth it? Consider the following. Let's say you put $75,000 down and then drive for more than 40 years without a single road accident. When it's time to give up driving entirely, you can petition for the DMV to give you all of your money back. It is a deposit, after all. On the other hand, if you do end up in an accident that is your fault, this fund will be used to pay out the afflicted drivers. You will then be responsible for restoring the lost funds to maintain the $75,000 minimum, plus you will have to pay out for any damages to yourself or your own vehicle. Now, compare all of that to a standard insurance policy. If you paid, say, $1,500 per year for 40 years, that is $60,000 in premiums, money that you will never get back. So if you never have an accident, you lose. However, if you do end up having an accident where the damages are more than that value of $60,000, you not only break even, you even profit from having the policy because you are still only paying $1,000 per year into it and nothing else. So what should you do? If you have a car valued at more than $75,000, then you absolutely need full coverage insurance so that if your car ever gets totaled, you get a new car essentially for free. However, if your daily driver is an economy car that you have no problems brutalizing until the end of time, you'd be better off socking away that $75,000 with the DMV and taking it all back in 40 years. Of course, coming up with that money in the first place, I'm afraid I don't have the answer to that one. I'm sure some of y'all are creative. Maybe you can figure it out.